Why you took that trade?
Yeah, I told us to check on the last 2 months or so. Yeah, last 2 months, I guess. I told us to check on the last 2 months. Why price?
Yeah, well, went down.
Price. And I also told us to check on the relationship between market structure from the beginning, from the lower time frame to the higher time frame, right?
You told us to check why you took that trade. The relation between lower time frame and higher time frame.
All right, so let us start with this particular place. I don't know where like five minutes, but let's start with this particular long trend that is happening here. This is the 5-minute time frame chart. Let's see if it can boost to that level. And if it can't, we are going to just adjust our charts to the particular level it can boost in the month. I guess it's going to. And let's go down to the. All right, it could not boost. It boosts just for 5 minutes, give us 3 months history. So let's make use of a 3 month history. All right. Let's make use of a 3 month history. Let's see how price relates from the 3 month history. That's what we are going to do. As you can see, I'm selecting my chart with different colors. The vertical line and the red. These are the areas where I want to back test. These are the areas where I look to back test. That is why I'm selecting them. Now, 15 minutes is giving us 15 minutes is giving us Control D. $15 minutes is also giving us, let's say, few months back. That's what the 15 minutes is giving us, like 2 months. Let's go for 30 minutes and see the history of 30 minutes. I'm trying to get the history so I can know where we backtest from. Okay, 30 minutes is giving us also from 5 minutes. All right, so I guess 1 hour will do the same thing and the rest. So now, what I want
I have a question.
Okay, what's your question?
I don't look at the chart just now. You took the trade based on 4 hour and 30 minutes.
Yeah, I took the
trade. They buy.
I'm not buying, I'm selling.
Question
is
this. You're selling now.
Yeah, I'm selling now. I took this trade to check on a particular candle formation, the effectiveness. That's why I took the trade. I already came out from the trade of last week. I will show, so I know where the entry is from, so I will show it to us. But this is a buy trade, it's sell trade rather, not buy.
Yeah, but based on 30 minutes and 4 hours, there is a break of market structure on 30 minutes. But there's no retest.
Can I continue, Naomi?
Okay.
Can I continue?
Yeah, sure.
All right, now this is the 30 minutes time frame. We have the 1 hour time frame of which I'm very, very sure. Okay, and we have the 4 hours. So we want to check the relationship. How price move, creating market structure and the rest for the past 3 months. Now look how I'm going to do this. Now I already highlight my 3 months history. That means from here, this particular place, I will highlight it with this my horizontal line, the places I want to look at. So I'll come down to the daily time frame, which is the primary time frame, and look for that exact spot where price started dropping from. Now, this is a 3-month history here, this particular point here in daily. This is a 3-month history. This is a 3-month history. So I would love to analyze this place, just talk about it in relationship to market structure. Now, in order to do this, all right, in order to do this, I understand that we first of all look for the particular point with the place that the market made the highest high and reverses price. Yeah, and these are the place. These are the places. So I will now look from year to year. Let me clean all this. I will come down to the 5 minutes time frame. I will now want to understand why price move from here to this point. Move from here to this point. Why respecting the daily time frame moving average? Because it is a monthly frame, it's a monthly time frame trade. So we are expecting it to follow the sequence of the monthly time frame, that is the monthly, daily, and then 1 hour, then 15 minutes. That is what we are expecting it to follow. So in order for me to look, I'm going to follow this sequence, and also I want to understand why. I will pick out the market structure level of this particular daily time frame, which is this point. Yeah. So I know that a close above this zone, a close above this market structure level, and a confirmed close rather, is going to determine price dropping down to, is going to determine price dropping down. It's going to determine price going back up, like changing course from bullish and bearish to bullish. And I don't want that, because I want to continue with the bearish trend. So what is going to happen? I will come down here. Remember, we are trying to see the relationship between market structure. We are trying to see the relationship between market structure in other time frames and the higher time frame. Now, I will come down to the 5 minutes time frame. Now, let's go to the lowest time frame, 5 minutes time frame. We want to analyze that particular areas where price. Okay, this is the low.
Sorry, sir. Why do we choose 5 minutes?
Yeah,
Sorry, sir. Why do we choose 5 minutes?
Engineer, I am trying to explain to you the relationship between the smaller time frame to the 1 hour time frame, to the monthly time frame. You get my point?
Okay.
I'm not fixing based on I'm entering. No, I'm fixing because I want to show you the relationship between time frames and market structure.
Okay.
Good. Now, if we now start from this particular point, this is the low. This is the low. Now, listen. From 5 minutes to the next thing is 15 minutes, right? From 15 minutes, we have the 30, we have the 1 hour. Now, if you look at it, price breaks through the, let's pick this particular low, our example. Now, price breaks through this low. From price breaking through this low, the next thing I want to look out for is 5 minutes time frame market structure. That's the next thing I want to look out for, 5 minutes time frame market structure. Now, price breaks this particular low here. It breaks this low. At this point, I will come down to 30 minutes time frame to look for that particular area to confirm it. And this is it here. Yeah, it breaks through 30-minute time frame level. It started going up. Started going up. Now, if you notice something, in order for price to close below this point, for price to close this, we have this huge drop. Or this huge drop. Are you seeing this huge drop? I'm using my rectangle to show you.
Yes.
All these huge drop are because of price got to a particular level and formed a pattern for an higher time frame retracement. For an higher time frame retracement, and that is how we are seeing those huge drop there. For an higher time frame retracement, that's how we are seeing those huge drop around those regions. Now, if we go down to our 5 minutes time frame, I want you to understand that price will continue to respect 5 minutes market structure. Look at from this low, we pick this as our low. And this is the market structure low. Now, price kept on respecting it. It respected this higher low, which is the next market structure level. Close above this high. This is the next market structure. Respected it. It did not close below it. Close above it. Respected this market structure. It did not close below this particular one. It went higher. This is now the next level. It went up. Now, in going up, what happened? We notice it breaks market structure here. Yeah. This particular point. It breaks it. And after breaking it, it changed price. Now, if you come down to this place, you realize that if this also happened to be a 15 minutes time frame market structure level, look at it. That means automatically price is going to be respecting the 1 hour time frame moving average. Can you see? Can you see the 1 hour time frame moving average?
Yes.
Are you seeing it?
Yes.
Now, what just happened there? They started the trend from 5 minutes buy. They did not close below 5 minutes market structure at all. Then when they got to a particular level, they formed their retracement, which is what? In respect to what? 15 minutes. Now, this particular 15 minutes, then they dropped to 1 hour time frame moving average. Now, this particular level is supposed to even drop to 4 hour time frame moving average level. And this is it. It's also dropped. But if you want to know why it did not drop, because sometimes it will not drop, it is just simply because in the 30 minutes time frame, there is no break in the 30 minute structure. Look at it. This is the 30 minute time frame market structure. Yeah. There is no break below this 30 minutes market structure level. Can you see? But instead, price now formed the same market structure again. Price formed the same market structure level again at this point. Yeah. This is the market structure level. Yeah, at this point. At this particular point. At this particular point, yeah, this is the low. This is another low. This is our market structure level. Price breaks this at the end of 30 minutes. We have the confirmation. Then it did what? It pushed price higher. Now, in pushing price higher now, another thing I want you to know is this. They continue again from afresh. They continue again from afresh. They continue again from afresh. From that same 5 minutes time frame. From that same 5 minutes time frame, they started another trend. Look at it. They did not close below this place. They did not close below this place. This is the market structure low. They did not close below this level. They took price higher. They brought it down. They formed another market structure level. They took price higher, brought it down, formed another market structure level. Took price higher, brought it down, formed another market structure level. Took price higher, brought it down, formed another level. And they keep going up, form another level. They did not break the structure. And so price kept on trending. Price kept on trending. Look at it. They did not break it until they got to this particular point. Yeah. They took it higher, yeah. Up. They did not break it. Then they went higher again. They did not break this level. This level we are now using. They took it higher again. They did not still break the next level. Let me clean all these ones. They did not still break the next level. Now, what did they do? They now formed their hand here. They formed their hand. Now, let me explain something to you. When you see market in a strong trend, don't expect a retracement anytime or a reversal. No. If market is going up with a strong strength, you don't expect any reversal or retracement. Not until you see them shocking the price. When they start shocking the price, like what they did there, they started shocking it. If you look at it, from this point, the distance between here, they took price up. They took price fast from this place. They did not drop it at all. Then they started shocking it from here. They took it up again. They shook it. It is when you see something like this shocking, that's when you realize that, okay, the retracement is building up. Retracement is building up. Now, what did they do? Let's continue. You know, we are still in the 5 minutes time frame. Because there was no break in the 5 minutes time frame, market structure, the market kept on trending higher. Now, what did they do? Look at it. From this particular point, this was now our new market structure region. Our new market structure region. And what did they do? They took price up. Range. And if you notice, they still follow market structure from this point. They range. And what did they do? They drop. Forming a market structure breakout, still went back up, but they now drop. So our duty now is to look for that particular place where we have a what? A break in the market structure. Let's go to 30 minutes time frame at the end of 5 minutes. Highlight the particular point we are looking at. Now let's go to 30 minutes. Now this is the 30 minutes level. Now look at it. This is now our market structure region level. This is now the market structure. This is 30 minutes time frame. And now from 5 minutes, what do we see? From 5 minutes, what do we see? We saw a break in the market structure. This is the market structure level here in 5 minutes. At the end of 30 minutes time frame. This is the particular bar that closed below the market structure level. At the end of 30 minutes. And what did they do? They changed their hand immediately. Now, if we continue looking at this chart, you will notice something. Let's go down to the 15 minutes time frame. You notice that what? The 15-minute time frame also forms something like that. But it is very, very small. Look at it. Very, very small. Not until they break it here, finally. Now, we now know that what the market has changed course. Now, we still go back to the 15 minutes, 5 minutes time frame. The market has changed course from the 5 minutes time frame. Now, what did they do here? Look at it. They started dropping price, following the same market structure. They started following the same market structure. Now, if you notice, when you see something like this particular wrong drop, don't expect any reversal at all. This is a particular strength market. The market is bullish, trending well. So you don't expect a reversal until they started shocking the price. Until when they started shocking the price, if they start shocking the price, that's when you know that reversal is blooming, is coming. Now, what did they do? They continue market structure, they drop, took it up, come back again, form market structure, come down, form market structure, come down, form market structure here, up, drop again, up, drop again. They drop, keep on dropping, respecting the 5 minutes time frame market structure. Now, they respect 5 minutes time frame market structure until they got to this particular point here. This particular point here. They drop. Now, this, can you see where they started shocking it? They started shocking it here. And when they shocked it, they closed above the 5 minutes market structure level, because this is our level. This is the level we are looking at, but they closed above it here. Now, listen and listen good. They closed above it here, but the reason why it did not push price up, they're supposed to do something like this and go up, is simply because when you come down to the end of the 30 minutes, price did not obey that place. Let me go back and put our rectangle. Yeah. All right, let's clean all this. Now we want to go down to that point where our rectangle is. Let's go to 30 minutes since we are looking at the 5 minutes. 30 minutes. Good. Can you see it? This is it. This is the rectangle. This is the rectangle here. And what happened? It is a week. Price did not close above it. It was also a week for the particular 30 minutes. So Naomi, you that like saying that price have already break it and this. No, you have to wait for that particular close. If you don't wait for the close, you might be stopped out like this. Then price shoots down just the way it did here. And what happened? It drops drastically. It dropped drastically. Now let's still go back to 5 minutes. Remember, we are trying to see the relationship between market structure from the lower time frame to the higher time frame. For now, we are using 5 minutes time frame, and 5 minutes time frame has not been broken. It has not been broken, and the market keeps trending. The market keeps trending. This is the area we're looking at. Yes, good. Now, at this particular point, we all agree that they did not close below market structure. So this market structure is still valid. Only that we have a change now. It is now this particular top here. And what did they do? They push price again. From this particular top, they push price. They push price down, try to form their market structure, down, down, down. They push price immediately. Now, after pushing price, what did they do? They now formed another what? Low, yeah. Come back. This particular thing, something happened there. And I will explain that later. I will explain that later. I will explain that later when we get to that particular area. Now, what did they do? If you go down to the 1 minute time frame, they formed their hand around here. And they break the market structure around this level. They mitigated this point here. Then they shoot up. Now, at the end of 30 minutes time frame, at the end of 30 minutes time frame, we are looking at this point. You will notice something that we have a break above. This is it. We had a break above. This is where they break the market above from this point. And in breaking, they change the direction of the market to bullish. They change the direction of the market to bullish. The market direction was changed from bearish back to bullish. Now let's continue back to 5 minutes time frame. If you notice again, the same thing, the market structure, they will obey it. They will obey market structure. They will keep on obeying market structure. Look at it. They shoot price up, market structure, market structure. This was the latest market structure. They did not close below it. They took it up. They did not close below it. They did not close below it. They push it up again. Up, down, market structure, forming market structure. How was that they keep on forming market structure? They did not break below the 5 minutes market structure. They did not break below the 5 minutes market structure at all. Now, if you keep on doing this thing, there will be no more time, but I want you to understand this. Now, let me now show you the transformation. The market removed from the 5 minutes time frame to another higher time frame. This 30 minutes, the 15, or the 1 hour, or the 30 minutes. When when the higher time frame changed. For example, this particular course here now, this particular course here, this particular one here, this is from the 1 hour time frame. This one is 1 hour time frame. And if you check from the 15 minutes time frame, you will notice. Let me clean some things. All right, if you come down here, you will notice something here. If you go to the 15 minutes time frame, you are going to see their hand where they form their hotel. Can you see? Very clear. This is it. Now, at the end of 1 hour, what happened? At the end of 1 hour close, look at it. They close above the market structure in 15 minutes time frame. They close above the market structure in 15 minutes time frame. This year, at this point, then this is now our B. This is our A. Then they drop down to this point to give us C. Then they went up. Now, this is what happened. They keep now. If you come down to this point, you will notice that what the 15 minutes time frame market structure was not broken. Neither is 5 minutes time frame market structure broken. Now, but what happened? They formed the market structure here, went up, come back down, up. Then they did what? They break the structure. They break the structure. In breaking the structure, what happened? They changed their hand again. Now, if you notice, the 1 hour is now the time frame now we want to make use of. So this is what they are going to do. They are going to move from 5 minutes to 15, from 15 to 30, from 30 to 1 hour, from 1 hour to 4 hours. That is how they change their hand in the market structure. So you can see how the lower time frame relates to the higher time frame when it comes to market structure. Are we there?
Yes, sir.
Now, if you want to look at this particular level now, you will notice something. And what is that? Price did not break through the 1 hour market structure at all. It did not. Look at it, the 1 hour market structure level. Yeah. It did not break through all those levels. It did not. It did not. It kept on dropping. It did not break through the market structure levels. It kept on dropping. Look at it, this level. Look at it, this is level 1. And sorry, a level, not level 1. This is a particular level. This is another level. This is another level. Another market structure level. Price kept on obeying and respecting this 1 hour market time frame, market structure level. See, price keep dropping. Price keep dropping until we came back to this point. That same 1 hour time frame. Yeah, and we had what? A close, a break in market structure, and price shoots up. Price shoots up, keep on moving up, higher. If you look at all this point, there is no break in market structure level at all. There was no break here. No break in 1 hour, 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 no break in 1 hour. They did not break. This is the last low. They did not break it. Now, all these points you are seeing, they are the lower time frame levels, market structure level. The reason why this thing dropped to this point is because we have a 5 minutes time frame close. The reason why it dropped here is because we have a 5 minutes to 30 minutes or a 15 minutes to 1 hour, but it did not close below 1 hour. So the bigger the drop, you are seeing these 3 to 4 candles, all these ones now. This is a reason, this one now is because price went back to what? Touch the 4 hour level. But at touching the 4 hour level, it did not break 1 hour market structure. It did not. Now, if you come down to this place, this particular place, now, let me put this thing there. You will notice something. This is a 4 hour moving average level. Let's go back and see. Can you see it's the 4 hour moving average level? Can we see it?
Yeah.
Yeah? Good. That's the 4 hour moving average level. And what happened to it? Price kept on moving higher until we have another what? Break in the 1 hour market structure level. We have another break in the 1 hour market structure level. This is the break. Yeah. And price kept on dropping. Up, drop, up, drop. It is not still respecting market structure level. Still respecting market structure level. Still respecting market structure level. And now we are now here. This thing did not load. It was still respecting the level. This is it. It was still respecting the level. Now, if you come down to this particular point, this 1 hour level, I don't know if this thing has loaded. Good. It did. Now, if you come down to this particular point, you will notice something. They changed their hand again. Yeah. 1 hour time frame. They drop it up. Came back here, changed their hand again. They changed their hand again. So what did they do? They used they are actually using the market structure in order to move price. And this thing occurs, this market structure movement occurs in every time frame. From the 5 minutes to the 1 minute time frame, they will respect every time frame, then it is going to transform or transcend to a higher time frame. So when it keeps transcending, it gets to 1 hour. 1 hour we hold the trend, they will not break 1 hour market structure. Then it's now going to go back to the 4 hours. When it gets to the 4 hours level, the 4 hours we owe market structure. When it comes to daily we owe market structure. It depends on your style of trading. So this is what market structure does. This is what market structure does. So I believe I have shown you people the market structure in respect to time frame. So when we go back again, I'll send another link. We now talk about the second assignment I gave us, which is based on my entry I took from that place. Any question from this one? Hello, any question?
Yeah, sorry I came late. I was in class. I don't understand the topic.
All right, the thing is, like I said, we are trying to do a review of the assignments given, and I recorded the class. The class now is recorded. So when we upload the recorded version, you can actually watch the recorded version, then get back with your questions. But we are talking about market structure in respect to time frame, that the time frame build up from the lower time frame to the higher time frame. From the lower time frame to the higher time frame, that is the build up of market structures.
Okay.
Because market structure have to play, and it also play an important role in trading. It plays an important role in trading. When you can master this market structure, I believe you understand the movement, where the price is going to go to, because the direction of the market, it's what's really important in technical analysis. If you can predict the direction very well, then you are getting it well. So I'm going to send another link where we are going to use to answer the second question. I'll be sending a link now. So I will end this class for now. Please, if you have a question based on market structure, just compile it and send it to the group.